Hey everybody, just wanted to jump on here really quick. One of the members in our chat room um, posted today asking, does anybody know why gold and silver had such a strong pullback today? You can see here, this is the daily chart of gold futures, and you can see today was a relatively strong downward day. So why the sell-off? That's going to really matter who you ask. In my opinion, I'm sure there's some news story that we can point to and say, oh, so and so happened and whatever, blah blah, and now this falls down. But in my opinion, the only thing that we really need to know is sort of what's happening within the market. So why did gold sell off? Let's start with gold. That's the chart I'm more familiar with. I don't really trade silver too often, occasionally, but not too often. So if we look at this, these candles are called the DPM control candles. It's just a different way of coloring the candles. And so blue is bullish and gray is bearish for me. And we can see that this rally we've had on the daily chart, we have not had a significant pullback according to this script throughout this entire thing. I mean, we had these little consolidation areas, right? These little sort of rebalancing areas down here. This is actually about where we entered our position. We have a long-term position in NUGT, which is a gold miners like 3x beta ETF, something or other. So we're in that and kind of riding this up and looking for more than this. But to me, this little bit of a pullback is nothing really to worry about. So why the pullback? Well, for one, we've had this huge thing. We're just sort of overdue, right? So that's like answer number one. Answer number two is we ran right into this demand area that was formed by this small consolidation right here. This is just a little bit of a sort of bracket that occurred in here. And we've had this mapped out, basically since it happened back in January. And so we're just sort of expecting resistance there. And I haven't done this on this chart, but let's just kind of take a look. I'm just curious to see in here sort of what we have as far as volume. And actually, I'm kind of surprised to see there's not like a tremendous amount of volume in here, but we do see like this was the peak for this whole sort of move down. This was the highest volume was up here, which is sort of like the initiation of the move, and some of that could have been, this top, right? But after that, see if we get rid of this blue candle, so that sort of as things were in equilibrium here, there was a lot of buying and selling going on, balancing going on here. If we were to look at that on the lower time frame chart, it probably would look like a small range. And so when we look at just this initial impulse down, this is our highest volume area. So we have this like high volume kind of zone here, and that's exactly what this demand zone is. So we drew the demand zone just off of price action, not using the volume profile, but it's interesting always to see the profile and how that stuff lines up. And so according to the profile, like the highest level is right there, right around 1918. And look at where we touched. So I'm actually a little bit shocked that was that accurate, because I didn't do this. I literally just pulled up this chart. I did not do this ahead of time. But, so why the pullback there? Well, like that's why. So there was some institutional money in here that drove this price down. And so what's happening as price comes back up to that area is buyers are going to start to get nervous, because buyers see this. Anybody who is experienced in the market sees this area as a potential resistance zone, and so buying is going to dry up. See the volume kind of decelerating here as this move is continuing upward. So the buying pressures, just sort of not there anymore. And then what we also have as we start to touch into this zone is probably some profit taking, and then short sellers are going to see this as an opportunity, right? Now, again, we have a long-term position on NUGT, and we were up about 30% at the peak here. And NUGT is a little bit underperformed, but you can kind of see the same thing on this chart. So this was our trade down here, and again, this was a little bit of a demand area, so we just came right up into it. I don't like this chart because of how all the gaps in it. I basically used the futures chart for my analysis, and then I just executed the trade on this ETF. But little demand zone here that we sort of consolidated in, and then we're just sort of probing the downside. There is most likely some demand here. We'll take a look at that. In fact, I'm just going to get rid of this for now. I'm going to hide this drawing. So there's going to be probably some demand in here in this little consolidation zone, somewhere in there. And what you'll see, again, is if we want to see, sort of what we might want to expect with this move down, kind of same thing, right? So we've got sort of two high volume areas in here. We might come down to this lower one ultimately. We could stay up at this one. So, may gold move a little bit more down? Sure, it could. This also could just be a gap fill, on here. But on the futures chart, we probably aren't going to see that gap. So you'd see maybe just a little bit of imbalance or whatnot. So when we look at this whole move up here on the futures chart, we should get a pretty clear idea of what this impulsive move up looked like. And so you can see that throughout this entire move, as we kept pushing up volume, it was happening on less and less and less volume. Now we're building some volume up here, so there is some acceptance of price in this area, but we need to build more because we may. I don't think we're going to come all the way down here, but we could. We certainly could retest this area. That would not be out of the ordinary at all. And again, if you look at this from a just a price action standpoint, right? If we were to mark a demand zone there, that basically lines right up with this peak volume, and so that would be a really tradable area there if you're not in this long already, or like for me, maybe I would add to my position if we pull back down here. I could add in at a pretty decent level there. If we fall through there, then I do think we're probably testing this high volume node right here, or something within this larger demand zone. I just don't know that we need to do that right now, but that could happen. So, I'm not super concerned with this move. If we look at this on a weekly chart, we just kind of see it the same kind of thing. Again, it's just very impulsive move up, and we're just overdue for a correction. And so where are we going to correct to? I think either somewhere in here or somewhere in here, basically. So we're looking at 1835 or so down to 1806 as sort of one area that we're interested in looking for a bullish reversal. Otherwise, we'd be looking for price to come further down here, 1795 maybe, but it could be maybe a little bit more precise and aim for this 1782 area, maybe call it 1785 to be a little bit, higher probability that you get a fill. So, it just wouldn't surprise me at all to see price action kind of come down and then continue up, if hopefully we are going to continue up, which I think we're going to. Of course, we never know for sure. The market will do whatever the heck the market wants to do, but that's basically what I'm looking at. And so the big picture, I guess, of why this is coming down is just that we had, volume drying up as we're moving up. We have this supply zone that we hit up here. We have this area of strong demand that we mapped out based on that little consolidation that we saw on the daily chart. Okay, so that was right here. And this dotted line was the highest volume price, the most agreed upon price, or where most of the trading, I should say, took place. So I guess the way to look at that is, this kind of move takes institutional pressure, and this was the price that most of those institutional orders came in. And so if any of those institutional sellers are still short, which I don't know if they would be or not, but they would definitely want to defend this position for sure. But again, also you're going to have other short sellers that see the opportunity, and you're going to have buyers that they see that at this point there's a lot of risk in holding long still. Now, for me, for a long-term position, no problem. But if you're swing trading this, or if you're like a short to intermediate term trader, at this point up here, the risk of holding long is very great compared to the risk of being short. So we've got some work to do as we push up through here. This zone up here is still yet to be tested as well. And we might get stuck there a little bit. Some of these other zones have been tested, and so I'm not as concerned about some of those. I just want to see if we just look at this. Yeah, so we could find ourselves, doing something like this and hitting this level right here. So that would be the next level that I would look at where we might see some amount of rejection. Hopefully at that point, though, we just reject into this area. So this pullback, to me, it's healthy. Like we just need it. There's just nobody else is buying at this point. That's to me what I see up here is just that the buying is just getting a little bit exhausted, and the trend is just getting weak. And that is that. So that's my sort of take on why we had a sell-off today on gold and silver.